Hey, REBallers. Today I am chatting with Ben Vail from Columbus, Ohio. Ben is the guy behind Hospitality, managing 125 units of fully furnished rental in Columbus. We got into all kinds of good stuff. We talked marketing strategies, how to keep those property protected, and even a fund Ben has started so you can get in on the action if you're looking to invest. Stick around. You don't want to miss. By the way, it's V. Lee here. If you enjoyed any of our videos and if you found value in this channel, can you please do me a quick favor and hit that subscribe button? It helps this channel more than you know. And the bigger this channel gets, the more people we can help achieve financial freedom. Thank you and enjoy the episode. Sorry for this interruption. I've been asked a lot about passive investment, and I understand that there is nothing passive about being a landlord unless you can find a great property management company. So if you own an Airbnb, a vacation rental, or a short-term rental, and you are looking to free up your time, contact our team at Buzz Vacation Rentals at 281-549-8432 or check out our website at www.buzzvacationrentals.com. Thank you, and back to the Real Estate Baller Show. This episode is brought to you by Jet Lending. For over 20 years, Jet Lending has been helping real estate investors succeed. They offer 100% financing so you can be in at $0 at closing. I can always count on Jet Lending to fund my deals. If you're looking to fund your next deal, contact our friend over at jetlending.com. This episode is brought to you by National Real Estate Insurance Group, a national independent insurance agency specifically for real estate investors. I personally use NREIG for my investment properties. They offer a low monthly payment option to help you to lower your cash out of pocket when buying an investment property. If you're looking for insurance coverage for your flips or your rental, reach out to them. You can click on the link in the show descriptions, or you can reach out to Jules at 816-946-8443. Hello, Ben. So good to have you here.
Thank you.
Thanks for taking the time out of your busy day. I know managing 125 units, not easy. What market are you in?
Yeah, thanks. So we primarily work in Columbus, Ohio, and a little bit outside of Columbus, all over the state, but we're really concentrated on Columbus, Ohio, and that's where most of my business is.
Tell us, what is it like in Columbus? Is it a destination, vacation? What make people travel to Columbus?
There's not too many what I would call vacation destinations in Columbus. We do have folks that travel for things like my beloved Ohio State Buckeyes, football games, things for the university, concerts. It's the capital of Ohio. So there is a lot of commerce. There's a lot of business travel. And really where I've found my focus is providing a space for those business travelers and for families that are coming to visit family in the area. So longer stays. And less for vacation, but maybe more for practical reasons.
So you primarily focus on furnished rental, and I think we met many years ago at one of the conference. I think it's maybe Verma that we met. Yeah. And I remember your focus at that point mainly was on short-term rental, like the nightly rental. Was that right? Or did you do both at the time already?
We've done both since day one.
Okay.
And I'll be honest, when I first got into this business, I didn't understand that there was a need for midterm rentals. And so I was a short-term rental business that every now and then had a guest that stayed longer than a month. Yeah. And as time has gone on, I've met those guests, I've learned their needs, and I've realized that the need is there. Mm-hmm. And so I've kind of focused on that. We still do a lot of short-term guests as well, and properties for that as well. But yeah, I'm really focused on the midterm these days.
So tell us about your portfolio. What size homes are they? Are they very similar? Do they have anything in common, or are they different type of homes? Because when we talk to the Airbnb operators, they all want to have unique, different properties, right? And I'm assuming in your market, it's not really like that.
Yeah, there's a wide range. First off, what we get to work with is the housing stock that is in Columbus, Ohio. And what I mean by that, there is a lot of older homes and closer to the downtown area where a lot of the commerce and travel happens and guests want to be. We get a lot of older single family houses, call it a brick, free two, built in 1905. And we get some duplexes. What's interesting is my company doesn't necessarily do more than a 4-unit building on a property. So the high rises and the mid rises, we don't do. But what we do is a lot of single family and call it 2 to 4 unit properties. And along with the single family, it comes a lot of work. But what we've found is there's a lot of value in larger single family houses, especially folks wanting to stay longer. And, our guests that are staying a couple months to work on a project, they really find a lot of value in that 3-bedroom, 2-bathroom with parking and a fenced yard. And they can bring the pets or their kids or, live their life normally. That's the type of property that we really are focused on and trying to provide.
So having experience in both short-term and midterm, do you think that you have to prepare the property differently for one type of rental or the other?
Definitely. Yeah.
Yeah. Tell us about that.
Well, that's a great question. I love answering this. So when we are thinking about our business, we actually like to start before we purchase the property and think about the guest and think about imagine who they would be and what things are important to them, what locations are important to them. And so that's where we start. And so with midterm guests as opposed to short-term guests, first with location, we're looking very close to where their work site is. There's a couple parts of our town where there's a big Intel factory being built. And so we want to look for properties close to that to target the guests that need that stay there. So once you've got the property location, then you're looking for size. And with midterm guests, typically we find that they need larger spaces. They need 2 or 3 bedrooms, and really they need a couple full bathrooms. That seems to be the real need, is several employees or workers or family members staying together, but needing to get ready at the same time and leave at the same time. And so,
no lines in the bathroom.
That's right. A 4-bedroom, 1 bathroom is not going to cut it. They aren't going to book it, So once you've got the right property size and the right location, as you touched on, there is preparation inside that's a little different. We really invest in high quality kitchen supplies and a decked out kitchen, as opposed to the short-term rental. Maybe not as important. Maybe you're going to have a meal or two, but you're not going to, for a long time, make several meals in a row and need that utility of that space. So we're focused a little bit more on utility and a little bit less on pizzazz. We're not necessarily putting in murals in these rentals per se. Yeah. We're not, focused on getting the most unique, clickable listing. We want those products to actually feel a little standardized. We think guests that are traveling for business and for midterm are not necessarily looking for the most unique property. They're looking for the best quality for price and size. And so what we're presenting is a really nice, new furniture. Everything is very nice, but it's not necessarily like with the short-term space where some operators might be trying to find, the most unique thing that you can't find anywhere else.
Yeah. Because that's just the big competitions. And I really believe that that's not easy to scale when you have to look for uniqueness in every home that you have,
Yeah. I agree.
Yeah. Me personally, I'm not creative like that. So if you give me a space and tell me to make it unique.
Well, it's interesting is from the real estate's background and perspective, that's the opposite of what we've been trained in some ways. When you're renovating a property, you kind of want to make it neutral and check everybody's boxes. And in a way, that's kind of what we're talking about here in the short-term rental space. A lot of people found, a foothold by being super unique, and that is hard to replicate and scale. You're right.
Super hard. So in your midterm rental, do you also provide linens, towels, like everything like you would in a short-term rental?
That's right. And
Okay.
more, we'll have maybe 4 sets instead of 2 or 3 for every bed. Just in the sense that, things like that are relatively inexpensive for what we're renting the house for. And we really just want to make it a great experience. They have all the dishes they need, all the extra linens they need. There's a lot less turnover and a lot less damage and a lot less wear and tear. Even though the occupancy of the actual property is higher, without the new people coming and going all the time, we're happy to provide high quality linens and plenty of them and all that stuff.
It's interesting because our experience has been the opposite. Every time a midterm renter check out, we end up having to replace all the linens and towels.
Yeah, that does
So
happen.
yeah.
Yeah. But I mean, the reality is that also sometimes happened with our short-term guests, unfortunately. So, getting much higher revenue for much longer, it makes, I feel like it's a lower cost per stay maybe. But yeah.
What else do you do differently between the the midterm rental and a short-term rental?
Great question. All right. So probably the biggest difference really is the guest interaction. And, for a short-term guest, we're interacting before they come, during their stay, and afterwards, and we're hoping that they come and stay again. And we're trying to make a relationship within a couple days and maybe a couple messages. But with the midterm guest, we're building a friendship, kind of a longer term, we're here for you. If you need us next week, give us, we want to be something that they reach out to often and we're in communication with, and really kind of talking about what needs they might have family coming next week, talking about the needs they have and how we can make this house or this product kind of work for them. Sometimes they'll leave and they'll go home for a week and then they'll come back and they'll want to, leave some stuff. There's a whole different set of needs that a midterm guest has. And so from a property management and service standpoint, it's a completely different relationship. These last longer. These have way more touches, but also it's rewarding. These folks that stay with us for months, they're like, I'm never going back to a hotel again. We really like to provide the unique things that they just can't get anywhere else.
Well, I'll tell you what, I mean, I was traveling and living out of hotel for 4 or 5 months. That wasn't ideal,
How did it go?
Well, let's just say we were ready to go home and have our own space. You know what I mean?
Yeah.
So for a weekend or probably a week or two, it's fun to be in a hotel. But for extended period, definitely a home is a better way to go about it.
Oh, yeah.
Now, I do have to say, being in a hotel, it's nice to not have to clean and do dishes and do laundry, right? But
Yeah.
you can't turn without bumping into each other. So
That's true.
okay, so as far as the midterm go, how do you market them? Do you still list them on Airbnb and other sites? I mean, how do you market?
Yeah. I mean, we still do Airbnb. Airbnb is our biggest source of new customers. There's a whole range of other distribution channels that we use for midterm rentals. And I'm going to name some names like Furnished Finder, Home Ads. There's a long list of places to list your midterm rental and find midterm rental guests. I think that what the industry is finding is that with midterm rentals, there's a lot more sales needed. It feels like with short-term rentals, you just get the right photos, you get it listed right, and it'll get the clicks and it'll get the bookings. But with midterm rentals, there's always a little back and forth. Like, hey, I'm looking for these dates. It's this price. Okay, well, what if it was this price? Well, what about this other house over here? The sales process takes a little longer. So anyway, we typically will have, we'll list on Zillow, we'll list on Furnished Finder in these places, and we'll get a lead. This is more of a sales process that's maybe similar to some other businesses where we have a CRM and we have to keep updating with those leads. Like, okay, maybe that project got canceled, but they're coming back next month. Okay, well, here's the ones we have available next month. So it is a higher touch to help those guests get the right place. But it's a lot different of a business. I mean, in the same sense, there's a lot of value of them returning. A lot of these folks are coming back for another project 6 months from now, a year from now. They're going to revisit grandma in Christmas as well. Those types of things, they're repeat reasons to come. And so if we can really build that trust and build that relationship where they feel like there's a lot of value there, we see the value in them returning to us.
So I think in today's market, it feels like the short-term market obviously is on the down cycle, right? Are you feeling that with midterm as well, or is it more balanced, more level?
Yeah, it's a good question. What I saw was somewhere around early 22 or mid 22, we kind of tipped the scales of more supply of furnished rentals than demand, as opposed to all the years leading up to it that I was involved in this business. And so, yeah, what we started to see was on a per unit count, the revenues were going down. On a nightly basis, on a monthly basis, the same house was just making less money. I will say in the short-term rental and in overall, it's kind of market specific, because in our market, most properties are both. Most properties are available for midterm rental. They end up, most of them, getting booked on shorter term bases. But the demand in Columbus for midterm rentals has shifted a lot of that inventory. I'm not the only one that has a furnished rental and realize there's actually maybe more demand as a monthly, and have converted to that. And so to answer your question, yeah, in the last year or two, I've seen the supply of midterm rentals increase dramatically. Like if you looked at Furnished Finder for Columbus, Ohio, I would guess the number of listings has gone up maybe tenfold in the last couple of years. But at the same time, if I look at all of the reservations my business has, the chunk that were taken by midterm rent guests has grown. So even though the supply has grown a lot, we've seen the demand for midterm kind of keep up with it in Columbus, Ohio. Now, this is very market specific and very even location specific, because in the part of town where that factory is being built, there's almost unending demand for midterm furnished properties. But on the other side of town, the demand is just way different. And for like a 1-bedroom apartment downtown, and the demand is way, it's way different. So it really depends, as everybody says, it depends on the product and the market. But in certain pockets and certain properties, we've seen great demand. And that's kind of where we're focused in on.
So in the space of short-term rental, we protect the property through damage waiver policy, or if you rent it through Airbnb, there's protections there. In the midterm, how do you protect the property?
First, I have to say, I'm a real estate broker, and I'm a property manager that practices trust accounting. I have a fiduciary duty for all of my clients, and that kind of level of professionalism and care is the first level of protection for the owner and for the property. Every guest, whether it's a short-term guest or a long-term guest with us, they sign a rental agreement. We do a background check. We have copies of their ID. We verify their payment. There's a whole range of different verification processes we go through with guests. But to answer your question, with midterm guests, one of the larger risks is an overstay, a guest that doesn't pay for whatever reason, but doesn't leave. In most states, they've now earned the tenant rights after 30 days. And being a real estate broker or property manager who's been through eviction process before is a way leg up for someone who's never experienced that or doesn't know the things to do or say, the right lease to have, all of the language and all of the protections. So really, that's, I think, the most important thing, is to be able to have processes and things in place to host guests longer than 30 days is the risk of that. And having a professional property manager, in my opinion, mitigates that risk quite a bit.
I would say that's probably one of the worst thing that could happen to us, right? When they stay and they don't want to leave and they don't want to pay.
Right.
So speaking of supply and demand, as an investor, you have a sizable portfolio. Would you recommend an investor to enter the market today, in terms of buying a short-term rental or a midterm rental?
Yeah. I mean, to be honest with you, I think it will be very hard for a new investor without experience to enter the market and have a profitable property. I think that, maybe 8 years ago, 10 years ago, that would be possible and people were doing it right and left. Today, there's a lot of professionals and there's a lot of people with experience that are really doing what I do, using data, finding the exact right property, furnishing it exactly the way that the guests want. It's more dialed in to be specific. And if a new investor who's never bought a short-term rental before, ran a short-term rental before, designed a short-term rental before, I see mistakes made all the time to where, unfortunately, I don't think that thing's going to cash flow. I mean, especially at interest rates today that buyers are facing, it's really hard to be successful, to be quite honest. To just pick a property and be successful, it'd be really challenging, I think. So I wouldn't necessarily recommend that to someone. With my fund, we're very specific and using all of that data. And I think that's the difference of an individual.
Yeah, I totally agree with you that I feel like during the COVID era, everything was just booming. We got stimulus money and we got people, wanted to travel and whatnot. And it gave the market the false sense of like profitability. So everybody wanted to get into this space, right? And now we see a large amount of people getting out of this space. So with your experience level, is midterm rental still a good investment today, in your opinion?
Yeah. So in my opinion, midterm rental is an excellent investment opportunity for the right market, the right property, the right location. I think it's the best investment opportunity that is available because I still believe when I talk to a new guest who's never stayed in a midterm rental before, and then they stay there for a month and I talk to them, they say, well, I'm never doing the hotel again. I'm talking to construction companies who have stayed at Best Westerns for the last 12 years. Every time they pay with their company card at Best Western, and then they stayed at a hospitality house and they're never going back to the Best Western, because of the differences. So there's those people still have to find this option. And I think that when that happens, the category grows. That's what happened with short-term rentals 5-10 years ago, is people were just discovering the option. And then during COVID, the rest of the people discovered that option. And you're right, that kind of grew and everybody thought, well, this is going to keep growing like this forever. But no, I think now people knew the category and we'll see sustainable growth. With midterm rentals, I think there's still a lot of that discovery to happen. And so that's why I'm pretty bullish on it.
If I was to get into this space today, what do you recommend that I do? Let's say I'm an investor, I have some experience, I have some long-term rental, but I think I want to get into this space because obviously I'm interested in making more money. Where do you think I should start?
My advice would first talk to somebody who is in it themselves, whether they own one or run one for someone or several, someone who's involved, and just get their advice and their take on it. But really, I think what you'll find is partnering with a professional similar to my company could be the way to find the right profitable property and take advantage of really the depth of knowledge of where people are booking, what they're paying, what properties are performing really well and why. And once you've got that data and you know where the demand is and where the supply isn't there yet, that's where you make a successful investment. So you could find a realtor in your market that does that. You could find a short-term rental manager in your market that does that. You could also find, what I help some folks with is we have a group of investors and we invest our money together. And so any of those would work, but I really would recommend going at it alone or without somebody that has experience and can point you in the right direction at the right property.
Do you own any of the 125 unit that you guys manage?
Yeah, I'm a part owner in about 25 of those. So there's some that I own individually, but really the majority of those are owned in my fund. My group of investors have formed together a couple different funds. So that's where we own most of those.
So if you, the fund, were going to look for property today, what do you look for?
Good question. What I would typically do is go back into my property management software and find which properties that I already have that are performing really well. And right now, what that is a 4-bedroom, 2-bathroom plus within 20 minutes of the Intel factory. And we're seeing almost unending demand for that type of product. So I would then look, okay, well, what can I buy that for? Look at some other options and compare those ratios. After comparing those ratios, then we would look at what's available in the market, see if there's anything for that price, and make a plan. And that's what I've been doing.
You know, this is different than long-term rental, right? When we buy a property, we also have to factor in the cost and furnish to get it started up. How do you manage that? Because do you actually cash flow instantly, or does it take some time to recoup your upfront costs before you can cash flow?
You know, one of the things I love about this business is there's multiple different strategies, and you can use different ones. You can combine different ones. One of the strategies that I've used since I got started in real estate was BRRR. Yeah, I'm sure you know that acronym of buy, renovate, rent, refinance, repeat. That strategy is essentially what most of my investors and I use here in Columbus. We will find the end property that we want, which, you know, like I said, for instance, in this one part of town, it's a 4-bedroom, 2-bathroom. That's really nice. And we know what it will earn as revenue. We know what it's worth for us when it's done. And then we typically will look at one that needs that renovation to get there. And so, no, to answer your question, in the last couple of years, almost every property I've bought, we put around 10% of renovation into it, 10% of the purchase price. And honestly, we're putting, you know, a very nice furniture package in those large houses as well. So that project, typically from when we purchased a property, we're seeing 3 months, maybe 4 months on average of preparation and renovation and furnishing and photos and marketing, and then we're ready.
Are you looking to grow the fund?
I am. So anybody who's interested in being a part of this, I would love to talk with you.
Give us a little bit high level of what the purpose of the fund is and what what's the use of it.
Yeah. So as I've gone along in this business, I found lots of different needs for short-term rentals, midterm rentals. But as I kind of alluded to earlier, we found a very good need when there's a new factory being built. There's a lot of people coming in and there's not many places to stay. So for instance, in Columbus, Ohio, where the Intel factory is being built, there are 14,000 construction workers showing up to a cornfield every day. And there are only 7,000 hotel rooms in the entire city of Columbus. What we see is a huge need for furnished monthly rental near the factory. So what we also see is these factories, they're being built in a agricultural area. Like I said, it's a cornfield. It's zoned agriculture for the entire area around that. So what's happening is, if you look at where these other factories have already been built in places like Phoenix or Chandler, Arizona, it was built in an area where there were no housing, but then 10 years down the road, lots of brand new housing was popping up, right? So in Ohio, the reason that's going to take a while is because zoned agriculture, you can only build one house every 3 acres. So what it'll be is it's going to take 2 or 3 years. Right now, there are hedge funds and Wall Street firms that are buying the farm fields, and they're going to build new build housing, and they're going to sell that for quite a high price, but they aren't going to be able to sell their first house for 3 years. Okay. So my plan in my fund is to buy existing housing that exists right now, renovate it, rent it out for that 3 to 5 year period as the factory is being built. And then when the factory is done and the full-time employees are moving in, they're going to want to buy those houses. So I have an entry plan and an exit plan in about a 3 to 5 year timeline. And in the meantime of that, it should cash flow really well to transient workers and transplant families. But once the factory is open and the permanent workers are moving in, then we will sell those properties to them.
Do you have a return, a percentage that you aim for, a cap rate? What do you aim for?
Yeah, we are aiming for a 10% cap rate. And for some of our properties, we've hit that. Some are a little below, but that's typically what we're looking for. We're looking at properties that the gross revenue is 20% of the purchase price. That's where we start. If it doesn't meet that, we don't really necessarily consider the property. And, in this area, we're looking at really good appreciation. Happy to report that the little town where we're buying in, Gahanna, Ohio, is now for the second year in a row the hottest market in the United States.
That's amazing.
By realtor.com. And so we see that as it's appreciating really well.
I want to clarify something that you said earlier, 20% on something.
Gross revenue.
Gross revenue.
The gross annual revenue being around or over 20% of the purchase price.
So if you buy a house for $100,000, let's just say, you want the annual gross revenue to be $20,000.
That's right.
Okay. Oh, that's good. Do you have plans to expand outside of Columbus?
I do. I'll be honest with you, V. I'm so excited about this opportunity of furnished rentals near a new factory that's being built, that what I actually see is this happening in other places like Phoenix, like Dallas, like, so by the way, the CHIPS Act that is paying for Intel to build this factory, there's 3 or 4 other factories around the United States. Those cities I just named all have a big factory being built. I see this opportunity near electric EV battery plants. There's Honda just is opening one in Dayton, Ohio. We're interested in that area. What we see is when any of these high-tech plants are coming in, they're typically going in an area where there's very low population, and the population is going to grow a lot. And so I've created this fund to take advantage of this opportunity in Ohio, also wherever else we see these opportunities.
That sounds like an amazing opportunity that you acquire property, you rent them out, and then once the factory is done, that should cause an increase in the populations, right? People come to work and they may need to purchase the house, and you could then cash out by selling.
Right. This is one of the first investment theses in my career where there's an entry and a clear exit. And you know what I mean? Like, as opposed to, well, it could go this way or it could go that way, or we don't know when it's going to exit. It seems clear.
I'm very excited for you. I hope it works out as planned, because I've known you for a while and I know you do make really good, smart decisions. So,
thank you.
So Ben, here you are. You're still fairly young. So it hadn't been that long since you were 18. But if you were to talk to your 18-year-old self, what advice would you have for him?
I love this question. I lived a bit of a unique path. And when I was younger, I probably had some hesitations about going out and working for myself or making my own way. And I would just look back and tell that guy, just go for it. If you don't believe in yourself, you're never going to get there or get it done. So have some confidence, have some 18-year-old confidence.
Good advice. Because, when we were young, we got a lot of time, but what we lack, I think, is a lot of confidence, right?
Yeah.
Okay. So here's the last question before I let you go. How does the audience get in touch with you?
Well, I can send you some links as well, but it's great to find me on LinkedIn. You can also visit our hospitality website, which is hospitality.io, and send me a contact form there.
Big thanks to Ben today for dropping some serious knowledge on midterm and short-term rentals. And thank you for staying with us. Thank you for watching. Again, if you found value in our channel, please don't forget to like and subscribe, and please share this episode with a friend. I really need help from you to keep the content coming, so leave us a comment below. Let me know what you enjoy about our episode, and let me know what you want to learn next. Thank you. See you in the next video.